Hello everyone, this is Rogelio Rodriguez of Vida Real Properties and Services. Today I have an interview with Gary Fuentes of BBVA Compass Bank, who has some products that home buyers may be interested in. So let's get started with that interview. Okay, so Gary, you work with BBVA Compass. How long have you been with them and where do you work out of?
Yeah, absolutely. So I've been with BBVA Compass for almost 2 years, and I actually house outside of the Greeley office, but my current role is actually pretty unique. I'm the only one with my title with my bank in Colorado. So I'm a community development mortgage banking officer within the state of Colorado.
What does that mean, the community development
So what
officer?
it means is that I'm 50% community development and 50% mortgage lending. So part of my job duties is basically to be involved in the community, offer first-time homebuyer seminars, offer personal finance seminars, just educate a lot of people when it comes to just what it takes to purchase the first home. And then on the other aspect, I do mortgage loans as well. So I'm able to help out my first-time homebuyers that I educate, as well as doing any other type of financing that they're wanting to do.
Okay, so that's good because that's you're handling both parts, not just like behind a desk, but you're out there in the field before they get to that part of the process of qualifying for a loan.
So we do a bit of everything, but the thing I like about my role is the fact that I do a little bit more. Rather than you come in and seeing me directly and then we just start the process, I might be your first process to begin with, where if you don't know where to start, if you go to one of these seminars and you and I get a chance to talk one-on-one, I get an opportunity to work with you even before we start the mortgage process. So I have had opportunities to work with certain people for, I would say a year before they actually decide to get a house. So it's a pretty rewarding feeling to know that you're helping people get into their first home. And, sometimes it's a little easier than they would expect it to be.
With that in mind, I want to put a few topics that's probably in people's minds that are looking to buy a home that you can answer with how you can address those needs and solutions that you provide through BBVA Compass to make that ownership happen. So one is just understanding that you guys, just the concept of portfolio loans, right? So these are some products that are only specific to you as like that's what you offer. Very different from what they'll find through other banks or through, let's say, mortgage broker. Tight market, low inventory. It's a seller's market, very competitive. Prices keep going up, so affordability goes down. So then we talk about down payment programs. So how can we get to where it's less money out of pocket and be able to afford those payments? So what solutions are you providing for home buyers out there that are looking for something that works for their budget? On the cash flow side, but also on not just emptying out their bank account for that down payment.
Okay, great question, Rogelio. So the programs that we do within Compass Bank, it's pretty unique, like you mentioned. It's something that the bank created and it's in-house. So the program that we like to focus on in general within our bank, and we could talk a little bit about other programs that are out there, it's going to be our 100% financing. So this program is geared to either first-time homebuyers or folks that are just going to own one primary residence. So the way this program works, and just to make it a little bit more simplified, let's say if you're going to purchase a house that is in an area that's considered affordable housing, what we help clients do is if they qualify for this program, we'll help them finance the house 100%. Right now, the way the program is also set up, we cover up to $4,500 of the closing cost, and there is no private mortgage insurance. So the way this program works is that if you go under contract, all that we want to ask you to as a contribution is at least $500 towards your closing costs, and you can get the house that way. So there's other. You could put more money down if you want to. You could pay lower interest rates and pay higher closing costs. I mean, there's ways around what you want to do, but that's generally the contribution that we ask for our borrowers to make. Other programs that do exist, and I think a lot of people that are going to be watching this video are going to be, either FHA or down payment assistance programs that are going to be approved through the state of Colorado, for example. So you're going to be able to get those products, through multiple avenues, different lenders, different brokerage companies. They're going to offer those same products. But when it comes to a program, especially this portfolio loan, is that it's run on Fannie Mae guidelines. So just to make it a little bit easier to understand, it's going to be considered a conventional loan, essentially, within a portfolio loan. So whenever you are going to do an appraisal on the property, it's on conventional guidelines.
Okay.
So whenever you're meeting with a realtor, for example, you're going to run into a realtor asking what type of product you're going to use. and they'll tell you, you know, if you're going to use a certain product, you're going to have a better chance at getting this home over this other product just because of those appraisal guidelines that it's a little bit more strict.
Right.
So that is something to keep in mind.
So of course, hopefully that realtor's me that they're asking, and that so if I have somebody because of the inventory, I would prefer that they have a conventional financing. Okay. Yep. If I do a search and we're looking for 3 bedrooms, 2 baths, at least 1,000 square feet, under 350 in a certain area, maybe 10 properties are going to come up. If I include that they must be FHA, like allow for FHA financing and borrow with that, maybe that drops down by 2 or 3 homes. And those could be the homes that were like ideal for the buyer, for the location, the schools, just the design of the home, all sorts of things. And so it's like, why face that risk that because of the not able to get the conventional financing, you lost out on the home that you preferred and not settling for just a home. Of course, there's other factors that come into play, but between FHA and conventional, if there's a program out there that just the way you are without, you know, changing up everything and waiting out months to get to that conventional approval, that you can get the conventional financing now, that'd be great.
FHA just has more guidelines. They have more of a strict process that they do have to follow, especially if they're using a down payment assistance program. There's other guidelines on top of those guidelines that you have to follow too. So whenever you're doing a portfolio product, kind of like the one that I was mentioning, being able to avoid a lot of those guidelines is pretty beneficial. And then when you do an FHA, let's say if you are doing a down payment assistance program, generally a lot of those are going to be considered silent seconds, where clients are going to be stuck in that specific property, you know, I would say 3 to 5 years. And I shouldn't say stuck because they probably love their home and they want to stay there longer. But let's say if something comes up, a job opportunity comes up in another state, or they decide to buy another property, you know, within that time frame, generally they have to pay back usually those silent seconds within a certain time frame, and then ends up taking more money away from the borrowers. And when it comes to the programs, kind of like we do portfolio side-wise, let's say if they purchase the property, but then a couple months later, and I had this, it happened to me actually with another client, if they want to purchase another property in another state, they're okay with doing that. I mean, we have no restrictions on them where we're going to have to force them to stay in this property for a certain amount of time, because we understand that life happens, things happen, and we're not going to require them to pay back any sort of down payment for this program.
If you were talking to somebody today and they're like, I want to buy in the next 6 months or even a little less, people's rental agreements are coming up, they're coming due in the spring or summer, what would be some suggestions that you would say, okay, do this, and there's a high probability that we can get you financed?
So if somebody is 6 months out for that example and they want to look into a house here in the near future, the first step is going to be to see if we can get them pre-approved. Because generally pre-approvals will last a long time. The things that we just have to update is going to be the credit reports and then, you know, income documentation for pay stubs and bank statements, for example. But what I would recommend though is, let's say if we can't get them approved, let's say for this example they're 3 months out from qualifying. At least at that point, once we pull their credit, we could get a strong indication on where they are as a borrower. And if we just need to tell them, is, hey, you know what, you're 3 months away from qualifying for this specific program. Or if you prefer, you could do an FHA program right now or a conventional program for now as well. And then we could probably do that. So there's qualification factors for almost every program out there. So that's going to be the job of mine to make sure that I talk to each of my borrowers individually and just let them know, hey, these are the products we do. This looks like this is the kind of type of money you want to put down, so this might be a pretty good product for you. Or if you don't currently have the assets and you know in 6 months you might not have like the assets large enough for a down payment, let's go ahead and do this product. So that's going to be part of what we do as a lender, and any lender out there, whoever you decide to go with, is that they're going to have to educate you and give you an idea on what type of product is going to be best suited for you in general.
What would be anything else that you would leave anybody who's watching this video to just get themselves ready and make it happen?
Yeah, so what I would say is, if you're on the fence of purchasing a house, just know that this is going to be the biggest investment you're going to make. It's going to be the best investment you're going to make as well, too. I actually saw statistically, I think 66% of the U.S. population actually owns a home. So that means there's an entire 44% out there that isn't taking advantage of the wealth of actually owning a home. So just know, as the property values continue to go up, it may be expensive now, but I don't anticipate them, slowing down anytime soon, and I don't think anybody else is anticipating it for it to slow down anytime soon. But if the values are going to go up, that means that you're going to get a property with a pretty decent equity. And then in the future, if you decide to sell it, and Rogelio will tell you too that you might have value in there. And then now you could use this home sale to purchase a bigger, better home if you decide to do that. So it's such a great investment, and choose the right lender you want to work with. Everybody's going to be, different personality depending on what you like, but just make sure you research your products, research your lenders, and then also make sure that you're just putting yourself in the right spot, because it's never the right time to buy a house. You're always going to have doubts, but once you get into your home and you live there for a certain amount of time, you just realize it was the best thing you could have ever done.
And interest rates. Not only prices going up, if interest rates go up, unless your income goes up and you're willing to pay more, you're going to be facing a situation that just things keep getting further and further out of reach as well.
Absolutely. And now, sorry, Rogelio, now that you bring up interest rates, that is something also take into consideration. So let's say if you are going to do a down payment assistance program, let's say through FHA. And again, there's nothing wrong with these programs. Everybody's going to fit into a different program depending on what they qualify for. But let's say if you decide to do that, and then now you have private mortgage insurance, and that's a whole different conversation we could have with that. But private mortgage insurance for FHA stays on there for the life of the loan. And just so a lot of people are aware, that's not really an insurance that benefits you as a homeowner. So let's say 1 year, 2 years down the road, you decide to refinance to get out of private mortgage insurance, your interest rates are going to be higher, and you're going to end up running into the situation where you could have done a conventional loan to begin with and not have to refinance your house and get a much higher interest rate on the conventional side than you would have originally if you started out with that product. So it does make a big difference, and that is something that, again, you have to make sure either you educate yourself with it or make sure you talk to a lender that is willing to teach you the differences between all the products and how it could affect you in the future.
Good information, Gary. I'll post your information, so if people have questions, they can reach you directly. Thank you for your time, and hopefully we'll have another session where we talk about something a little bit different. There's so much that we can always be talking about and informing the public.
Absolutely. Thank you so much again for having me, Rogelio.